All right, hello, good morning, good evening, and good night. I hope you guys are doing absolutely fantastic because today, what we're going to be talking about is all about the Yieldmax funds. The reason being is because the Yieldmax funds released their dividends just a couple days ago. They went ex-dividend, I think, on the 4th or the 5th of July. So what we're going to do is we're going to debunk which ones paid roughly the biggest dividends for the Yieldmax ETFs. I also want to talk and touch on our strategy, as this is a main strategy that we have going forward in our Questrade portfolio. As remembered, we do have a link in the description if you want $50 for yourself for a new Questrade account if you open a new Questrade account. But anyways, what we're talking about today is we're talking about TSLY. We're going to touch on to as well NVDY because they paid a great dividend, MSTY. Also, we're going to touch on YMAX and the strategy with SPXS. And the reason being is because this strategy has been performing fairly solid. It's been performing the way that I want, but there is a key flaw that I do want to talk about in this video. So if that does sound good, we're up to 5,221 subscribers, 250 subscribers in the past 28 days. That's pretty good. It's like 10 new people every day. I want to say hello to everyone who's new and hello to everyone who has been here since day one. We're talking about some dividends. So for Yieldmax, let's see what happened. NVDY came in with the highest dividend, $2.47. That is a fantastic dividend. I have their stock chart history up right here. And you could see that most people, or not most people, but a lot of people think that for the Yieldmax funds, that they just trend down over time. They have crazy NAV erosion, but it all depends on the underlying stock. True, it is very true with TSLY in the past that it has trended down because for a long period of time, Tesla has trended down as a stock, but for the last little while, it's been trending good, and so has NVDY. You can see all Yieldmax ETFs, they start at a $20 price point. This is probably nothing new to you, but you can see that NVDY over time has risen all the way up to $30, which is a 50% gain from the IPO, and has paid out huge dividends along the way. NVDY has been a solid dividend payer for the history of the Yieldmax ETF. Pardon me there. And then we got MSTY, another one which has also been paying some crazy dividends, up to as much as $45. That's about like 125% return in terms of the capital gains when it was, obviously trending up. The underlying stock was trending up very well too. MSTR, which is the underlying, it paid a $2.33 dividend, or that is what it's going to pay as it went on their ex-dividend. You can see it's been trading down for a little while, but the underlying stock, MSTR, has had so much movement, so much volatility that it's still able to pay these huge dividends, and you notice that they're still above their IPO price. So if you purchased way back when, then you're not doing so bad. But if you did purchase most likely in any of these times, okay, you are still receiving the great dividend, but your capital has suffered in terms of your appreciation. Now, next, we're talking about Coney. I don't have Coney up, but what I do have is TSLY, which came in at a $1 dividend. Look, TSLY is back to paying a huge dividend, 70%. Why is this? It's because Tesla, the underlying stock, has been doing very well this month. I don't have Tesla's stock price chart history up, but I do have TSLY, and you can see here, trended from a low of almost $14 all the way up to $17. So in the current month, that's a $3 gain on the current share price and a $1 dividend, which was taken out of the current share price already. So TSLY has been performing very well this month. All time, it has been performing very poorly. I hold TSLY in my main dividend portfolio. I call it my real life portfolio. I had 140 shares, but they did a stock split. So now I have 70 shares, which at $1 is going to pay me roughly $70 this month. And that really boosted my monthly income. And that's one thing to think about when you're buying Yieldmax. When you're buying these individual ETFs, if one stock has a really great month, such as TSLY, I seen a huge boost in my portfolio income and my capital gains in TSLY because the stock did very well, even though I'm currently still way down in that position. Now, for my other portfolio, what I have here is with Questrade, and I invested about, you can see here, deposited $4,500. I'm currently down about 1%. This is due to, in part, because I did pay a lot of fees on my first conversion, but my second conversion with Questrade, I was able to get it for only $5, converting 3,000 Canadian to American. But you can see here, the portfolio is doing well. You could see from SPXS and YMAX, the strategy is working fantastic. You could see here roughly $33.11 in the negative for SPXS, and $33 in the positive. So it's keeping a fair plane. My strategy where I thought YMAX would keep up with the S&P 500 has been doing well. Of course, their stock price charts differ when you look at the 6-month because YMAX does pay out pretty high dividends, a 40% yield, so they are subject to these big dips, which does make it look like it goes down over time. But with the dividends, it's been up over time, and it's been doing very well. It's IPO'd at $20, just like all the other Yieldmax funds, yet still sticking about that marker and paying out about a 40% dividend, which is fantastic. When we look at SPY, SPXS does 3 times in the opposite direction. And of course, if SPY is doing well, the S&P 500 is doing well, the 3 times bear is going to be performing in 3 times the opposite direction. So it has trended down very much. And the one thing where I mentioned at the beginning that the strategy is not necessarily fantastic. Look, it's great for dividends, but at the same time, the reason why we invested into SPXS is to protect our capital. Just taking a sip of water there. But with this going 3 times down, we are also not really gaining in terms of any capital. Any gains on the side of YMAX. Any gains on the side of YMAX is pretty much diminished by SPXS, which is to be expected. But one thing that I will look to do in the future is I'm going to look to buy more YMAX and hold off on SPXS. I view SPXS as a hedge to the downside. I don't view it as a cash grab or anything like that. The only reason why I hold it is because if the S&P 500 is to fall, YMAX is likely to fall pretty hard too. And when that happens, I'm going to look to sell off SPXS, collect hopefully a capital gain from this position and invest it right back into YMAX, where then YMAX can appreciate with the S&P 500 again. Because long term, I'm bullish on the stock market, and I do believe the S&P 500 will perform well in the long term. I'll put that money into YMAX, watch it grow, and when I feel that SPY has reached a level where it's just way too high, then I will look to buy SPXS once again. So that is my strategy. That is what I plan to do. I hope you guys enjoyed this video. This was a video to go over the Yieldmax dividends, how exactly my portfolio is performing so far. I hope you guys enjoyed. If you did, please do subscribe. We're up to 5,221 subscribers. I hope you guys do take care. I hope to see you in the next video. And yeah, please have a great day, guys.